Well, good afternoon, everyone. Welcome back to the channel. Just wanted to get a quick one out here. So, what I want to discuss today, really briefly, is the new ETFs like QQQY and JEPY. What actually would cause funds like these to increase in value? On a side comment here, we have some USOI purchased at a 24% yield. That's awesome. We'll look at that. So I'll tie in some market coverage too, but I'm going to give the coach's theory on what causes these funds to go up. And what I'm going to say, spoiler alert, is just basic supply and demand, just basic trade volume. So as these funds are new, just like yield max funds, when there's some buzz around them, I feel like if they're going to go up at all, that's what's going to cause them to go up in the short run. But let's take a look, because the one I was looking at earlier has actually been going down steadily since it debuted. So let's look at a fan favorite, Yahoo Finance. So the Defiance NASDAQ 100 Enhanced Options Income ETF QQQY is $18.64 right now. Now, as far as today, it's up almost a full percentage point. And this is pretty easy to say as far as what's causing it up. What's causing it to go up right now is the AT&T ad with the AT&T lady at the top of the screen here, right? Just kidding a bit. No, it's actually just right below it, the fact that the NASDAQ is up 160 points today because of the great jobs numbers we had in part. So for today, that one's easy. That's just one day, right? But this fund's been public for almost a month. So, and it's dropped just over $1. So we're going to see, just like with many or even all covered call ETFs, we're going to see most likely a steady decline, a steady net asset value erosion. And that seems to be what we're observing here as well. So there will be days where it does go up, like September 15th. It did go up from the 15th to the 19th. It went up a few cents, then back down. But you can see the trend is down. Now, September 29th, we had a big drop. I'm wondering if this coincide with some event here. Let's look. Because I know these both paid a dividend up front, basically. So let's look at this steep drop here. All in all, okay, so this was a $1.10 dividend. So I'm guessing the 29th might have been the ex-dividend date. Or was it? I can't remember now, but I'm assuming that coincides with the dividend. So that's the QQQY, and then this JEPY, which is very confusing because it's easily mistaken with JEPI, which is a JP Morgan ETF. But JEPY, I believe, is the S&P 500. I'm not sure why they picked that. They should have called it, well, they couldn't use SPY because that's already taken, but they could have called it, I guess you can't put an ampersand in a ticker, but they could have called it SP. They could have at least put the letters S and P in there. Although, as I've always said, I think the S&P is a horribly named, Standard & Poor's. Who would want to be Standard & Poor? I'd call it the UNR, unconventional and rich. Anyway, check this out here. Okay. All right. So this one, same behavior. We're down almost $1 since fund inception, which is a week after the other one we just looked at. So we're down to 1866. But it's easy to say on a day like today, it's going to go up. So you could trade this. If you're looking for the dividend, if you want to play this, I would say you've got to have a decent amount of time on your hand, because you can't, these aren't funds you can just buy in and ignore. You've got to kind of actively manage, actively hedge these. But on a day like today, it's pretty easy to say why it's up 0.64%. Because to the top right here, the S&P is up. Now you'll notice the S&P itself is up 0.9, but this one's only up 0.64. So it's pretty easy to say why this went up today. So that's what I would say for a short answer. And it's also ahead of the net asset value. See, the net asset value is 1863. So yeah, so short answer is, so volume, trade volume, supply and demand is going to push, in the short term, could push these up. But the long-term trend, I feel, as these pay these high dividends, it's going to erode in value over time. So, but those are the only three factors, like I've said, that are going to probably drive the price up. Now, as far as, since this has been trading, it's already paid a 90-cent dividend. So that's right, it's $1.10 and 90. I remember this now. So what we'll notice when this dividend was paid out, we're going to see, not predicting the future here, but well, it's already happened, so it wouldn't be the future, it would actually be the past. It's very easy to predict the past, by the way. All economists are great at it. But if we look, so watch this, we're going to find on this chart that we're going to find that the day the dividend was paid out, a steep drop in the price coincides with when the dividend was paid out. So let's see, it happened around here, right? So see, look, we lost, did we lose? So it was a 90-cent dividend, and look at that. We lost more than the dividend because it was 1968. So we lost like $1.02. So we actually lost more than what the dividend paid out. So that's a bummer. The high dividends are nice, but when the fund loses more than what the dividend is, that's never a good sign, right? Now, as far as macroeconomic market update here, so the Dow is doing well, up 0.71. The Nasdaq's up 1.21. That reminds me, I've got to check on my TQQQ, which is in the tank. T stands for tank. S&P is 38 points up, 0.90. Even the Russell is up. Crude oil is slightly up, and then there's gold. So look at that. Everything's up across the board. So a good Friday, right? All right, you all. I'm looking for possibly doing a live stream with the engineer tomorrow. Oh, here we go. So this was a fan request. And let's see, who is M. Leo, dividend payout? Let's see here. So I believe the fan that requested this is actually on. But besides premium and treasuries, how does it go up if it sells and closes puts daily at different strikes? Well, what I'm saying is that, like on a day like today, when the underlying index, that it's somewhat mirroring, when that's up significantly, you're going to see at least a day's gain. So the way I would play this, I feel like I would have to just be a full-time day trader to play some of these things properly. But I would play this for the dividend and then get the dividend. And then on a day like today, say, I would have to basically guess that the jobs number is going to be great. And then say, oh, okay, so the market's going to soar, and then sell out of it on a day like today. But this isn't one I feel like I could hold for a long time. So that's the best answer I have. There's no synthetic position to follow the underlying. I'm not sure. Socrates is on. I just sold all of my JPQ because the value drops more than the. We're kind of all realizing that, aren't we? I knew that with QYLD, but for a brief amount of time with those yield max funds like TSLY in the month of July, and I'll never forget it. It was a 70% dividend, and I was up 15% in principal. It was great. The gain is premium. Okay. But I mean, it makes sense to me. S&P's up, JEPY is up, right? NASDAQ is up, and then QQQY is up. So let me try to go to the site here. Let's see. Defiance. Let me see if they have anything. Defiance, ETFs. I'm such a dedicated YouTuber, by the way. I'm actually technically on my lunch break, live streaming with all of you fine folks. And you all still want me to come up with a good answer. So they hold money back to add to the NAV. Are you seeing that? Hold money back to add to. I'm not sure. That's really something different if something like that happens. Okay, let's see. What lady? Which one? Which one? All right. Let me go to. Let me go to the site here. Let's see. Oh, and then I want to share a Google search I did. Let's see here. Okay. Let's do this one. Okay, so do you all track with my just basic line of thinking? So the S&P and the NASDAQ are up significantly today. Both of these in some way have something to do with call options on the S&P and the Nasdaq. So therefore, does it make sense that when the Nasdaq and the S&P are significantly up in the same day, that these funds would be up? That's like the best I can kind of come up with for the same day. Door Gunner, how have the Defiance funds performed so far in the short time? Oh, they've been down, honestly. So I mean, they may be up for a day or two, but the trend is down. So, all right, let's do this real quick here. Y'all are getting bonus time from the coach. Let's see. What did you say here? Yes, if I sell a put on a green day, I'll make money. No shit, it's premium collected. Well, there you go. All right. Okay, let's go to the site here. Oh, they're in Miami. They're a Florida. Well, I think Yield Max is too, actually. So you all are expecting the coach to use advanced brain power on a lunch break. Sometimes lunch involves drinks too, you know. All right, let's see. Not impressed so far. Contact us. Built for the next generation. Oh, there you go. Look, here's a picture of them on the stock exchange. I want to invest now. Now that I've seen a picture of them on the stock exchange, now I want to invest for sure. Insights. EV stocks for 2023. Oh, this is kind of outdated. August 7th. Somebody needs to update their site. Hey, homework assignment for somebody. You want to call these people up. First of all, get one of them on the channel. And then second, tell them to update their website. Founded in 2018. Oh, look, we've got a 5G. Now that's a cool ticker. 5G, get it? FIVG. Quantum Hydro Cruise. EV QQQY. Oh, so there was 5 other ones before these. I wonder if these would get any attention here. I think it's mainly these. So let's see what we've got here. Distribution rate 67.55%. Okay. Expense ratio is the same as Yield Max. Why is it redirecting me to the top? There's the QSIP number. Now we're sold, right? Here's a chart. And then a bunch of X's. Oh, here we go. Treasuries. We have 2 puts. XND. What is this? If I'm reading this right. So it's short, these puts, right? So it's selling them. So that's where the premium's coming from. But is it daily? And then, okay, we're going to have 3 more paydays on these. But my prediction would be right now, without the forecasting equipment, which isn't in front of me, my bold prediction would be these probably won't maintain their dividends. What's new, right? How about this? Reasons to invest from the horse's mouth. Where is it? Oh, this is, you know what? This is kind of a not so good, bit poorly designed site. Look how they disappear when you try to click on them. Their web design could use a little work. Obviously, I'll say this. Obviously, the expense ratio is not going into the website. Should I keep bashing them? It makes them less likely to come on, right? I should play nice, right? Maybe we could get Join Jen to call up. She could rough them up for us. Hey, Join Jen, if you listen, that's your homework assignment. You got to call these people up and rough them up for us. Okay, let's see. ETFs. All right, we want to look at this one. So let me just look at this one here. Continue my cutting edge research here on a lunch break. Let's see. Where's the... Okay, that's... All right, so what I see, some treasury, some cash, and other, and then some puts. So I'm assuming these are short. So that's how it's generating premium. Anything else I'm missing? Let me go back here for a second. Oh, here you go. You'll like this one. So this is how I started my research here. Let me switch tabs here. What are we not answering? Maybe the engineer can answer. Maybe it takes an engineer's level of expertise to crack the code on this. Call it paycheck insurance. Yeah, you could, as long as it's paying something positive, right? Pretty much, that's what it seems like. Sold all your Tesla, it was down 4%. Feel the dividends, just give me my money back. Not quite. It's basically like I'm down more than the dividend has paid me. How does it NAV? I'm not sure, honestly. All right, let's do this here. So at a conceptual level, because sometimes it's easier to just stick to the textbook concepts here. At a conceptual level, when I just tried to find some articles here on how these both go up in value, so I came up with, so the first one, how does an ETF increase in value? Increased demand for the ETF shares should raise its price. We said that already. And there's not much that Google has because these are so new. There's a Yahoo article, and then there's other competitor YouTube channels coming up in the search engine. And of course, the coach is not on the top of the list. We'll have to call Google and air out our beef with that. There's a Seeking Alpha article. Did the engineer write this one? Maybe I'll pull up this one. Maybe I'll get 5 seconds of it before the paywall goes up. How about that? All right, let's see here. Oh, this is just comments. What's the analysis here? I think I've got to sign back in here pretty soon. Let's see here. So there's some comments here on Seeking Alpha. He calls it, this guy calls it the sexy JEPI, but they really have nothing to do with each other, right? Anyway, all right, well, so they're both up today. So I think it's a safe assumption that when the NASDAQ and the S&P are up, correct me if I'm wrong, but when they're way up, I think it's safe to assume that both of these would go up as well, right? Let's see if Terra Slayer agrees with me. If we're talking about QQQY and JEPI, I think it goes up when they sell the puts at profit. I haven't read the prospectus yet. That could be. Back over the other computer now. The NAV goes up any day where the morning's implied volatility is lower than the realized volatility end of day. It builds NAV on calm but bullish days. There's a good answer. There you go. See, you knew if you tuned into a video, you would get an answer one way or another, right? But the key part is that you had to tune into the video to get the answer, right? Welcome. I have questions about how much of the distributions they hand out or if they keep a little similar to QYLD. They might. I mean, that's definitely a point that's been raised for sure. So if the NAV increases based on volatility premium, that premium doesn't get paid. Well, good discussion. I guess we can continue it in the Discord, but as far as the video, the coach is going to have to go. So thank you all for tuning in. Like, comment, and subscribe if you haven't already. And we will see you all soon. Hopefully we'll do a live stream tomorrow. And we have question mark. So on that note, I'm signing off. Thanks again. Take care.